Okay, so in today's video I'm going to show you guys how I was able to take this trade on BTCUSD, and this trade here was posted on my Telegram channel. So if you are here to join so that we can trade together and make money together. So this is BTCUSD. So this is let me show you the trade on my Telegram channel. So this was the trade here. This was when I asked them to sell. You can see this was when I asked them to sell. So this is when they traded TP. You can see it here on the Telegram channel, right? So far this week we have been able to take one trade and it's one TP, right? So this is BTCUSD. I'm going to explain like before on how we take this trade. First of all, we have to understand the direction of the market. You have to know the direction of the market, all right? So this was another trade that I took, but it was not posted on the channel. So you already know that market has created a market structure shift, and this one got triggered. Market is trending down. So as market is trending down, what you should be looking at for on a lower time frame, what you should be looking at for is to set to clear this trend and liquidity. So observe very well, there is a trend and liquidity here. The market is trying to sell. There is a trend and liquidity here. So you can either use this trend and liquidity here, or use this trend and liquidity that the market is trying to sell to clear out, whichever one. So you can use the immediate one. So market is selling to clear out this trend and liquidity before you can even think of buying. So that's what BTC is currently doing. It's selling to clear out this trend and liquidity here. So you know, on a daily time frame, overall trend for BTC is on a daily time frame is sell. BTC is on a downtrend on a daily time frame. So observe it very well. So on a daily time frame, you can see BTC is on downtrend. It's creating a series of, you can see, creating a series of higher highs, lower lows and lower highs, creating a series of lower lows and lower highs. So it's on downtrend, and you can see it's currently on this trend. Market have not break above this trend line since BTC has been selling. It does not break this trend line, so market went back to this trend line, and that's why market is reversing from that zone. So as BTC is reversing from that zone, this zone, the target is to set to clear out this is a 1 hour liquidity, but if you take the 4 hours, discover that there is liquidity being accumulated at this downside. So we are expecting BTC to sell to clear out this trend and liquidity from the 4 hours time frame. All right, so we are expecting BTC to sell until clear out this trend and liquidity on the 4 hours. But when market get to this trend line side, market gave us a market structure shift and started trending down. So since you have gotten the reversal concept that we treat, what we need to be doing on BTC now is for us to look for double break structure, and then we execute our order. All right, we look for double break construction, we execute our order. You can see here this reversal. You can see what happened here. Market was trending up, creating a series of higher highs and higher lows, and when this zone got taken, our market gave us inducement, and this is the pay point of interest. And then if you are selling, you set to clear out this nearby liquidity zone here, set to take out this zone. All right, so that is why market sell from this zone. That's why market sell from that zone. So as market was trending down, I observed that okay, there was a double break of structure where market take out this key level here. The market take out this zone here, and then this zone here again. When the market take out this zone here with this bearish candle here, it take out these key levels here. So, and then after that, if you are trading this strategy, the first thing that you look out for is to get the market structure part of your strategy. And you can see market was trending up, creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. So this is the last low. So the market break out. This is the last zone here. But you don't use market structure shift to trade this pattern here, because we are already on the downside. So what you look out for is the double break of structure. That's why I use double break of structure. If it happen that is on the higher time that I was expecting it to I will use this place as my market structure shift, and then mark this place as an inducement, and then execute my order. But since this is a continuation concept, we use what we call a double break of structure, a multiple break of structure. So when market take out this zone and it take out this zone, it gave me an inducement, this first value pullback here. So this is a pullback, market pullback and close below the candle that causes the double break of structure. So you can see it very well here. So mark this place as our inducement. So like I said, the first thing that you get is your market structure part of the strategy. So after you get the market structure part of your strategy, the next thing to look out for is the inducement part of the strategy. So this is the inducement when market pull back and give us this inducement here, this pullback here. So market structure, liquidity, and point of interest is what we trade, which is SLP. Market structure, liquidity, and point of interest. So the first thing to look out for is market structure. After that, look out for the liquidity part of the strategy, and the type of liquidity that we make use of is inducement liquidity. And inducement liquidity is the first value pullback after a market structure shift or a double break of structure. So in this scenario, the first value pullback after my double break of structure. So this is the first value pullback that we have here. The first value pullback here. So we'll delete this. So we now have the rules in picking a proper point of interest, and the rule number one say there must be a double break of structure, or which when market take out this zone here and this zone we have a double break of structure. The second law say there must be an inducement. Then market give us this pullback here and give us inducement. Rule number three say that you should mark out all your possible point of interest. So this point of interest here is another one here. There's a breaker block here, and that other block. We have another block here. We have another block here, and then another block here. All right. So like I said, we make use of 2 point of interest. We make use of order block and a breaker block. So in a scenario of another block, you don't use the rules in picking a proper point of interest. When you have your double break of structure and you look up for a sell pattern and you observe that there is a bearish order block, you go ahead and execute using your bearish order block. But in a scenario where you have a multiple point of interest, you have to follow the rules in picking a proper point of interest. So we have multiple point of interest. Rule number one say there must be a double break of structure. Rule number one. Rule number two say there must be an inducement. Rule number three say that you should mark out all your possible point of interest. And then rule number four say the point of interest needs to be unmitigated. So as market is creating inducement, you ensure that as market is creating inducement, you should not touch any point of interest that you want to use to execute your trade. So as market creates this inducement, it does not touch any point of interest that I want to use, so all the point of interest are still valid. Then the final will say that I should pick the point of interest that's closest to your inducement. So the one that's closest to our inducement is this one here, the first one here. So we delete other ones and we make use of this point of interest here. So this is the point of interest that's closest to our inducement. So I will tell you the reason why I extend my stop loss to this point. The reason why I extend my stop loss to this point is because if you have been trading, you observe the market condition this period, discover that market is kind of unstable. Market is kind of unstable because of war and other economic issues that the world is facing currently. So sometimes markets will just, because of spread, it will just kick you out, and then before you know, it will now start going to your direction. And also because of overnight spread, market will just open, and main market opens sometimes to gap, and this trade it was taken during the evening time. So that is why I have to extend it this way, so that anybody who is using Profirm or other broker, that when market open it will have an open gap, it will not take them out. So that's why it was placed at the end. And then the TP was target to clear at this nearby liquidity here, this nearby liquidity, this. So that is why I took that trade from there. My TP was there. Alright, normally my stop loss supposed to be slightly above this other block here, and this is supposed to be 1:5. If you extend it here, it's supposed to be 1:6 or thereabout. Alright, so that is what happened on BTC. That is what happened on BTC. So for some of you that are new to my channel, you may not understand what market structure is all about. So market structure means the current direction or the current flow of the market. Now you have to listen to this part of the video very well. Market structure is the current direction or the current flow of the market. Now we have three ways that market make it movement. No matter what you are going to see on chart, market does not make its movement outside this tree that I'm going to mention on this, in this part of the video. Alright, now basically we have two ways that market make it movement: trending market and ranging market. But trending market is divided into two, which we have uptrend and downtrend. Uptrend is for a buy, and then downtrend is for a sell. Alright, so ranging market, you can also, some people call it a consolidating market, others call it ranging market. Alright, so now an uptrend is when market is creating a series of higher highs and higher lows. That's what we call an uptrend. Market is creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then higher lows. This is what we call an uptrend. Then a downtrend is when market is creating a series of lower lows, lower highs, lower low, lower highs, lower lows, lower highs, lower lows, lower highs, and then lower low. This is what we call a downtrend. You can see the current low is lower than the previous one. This low is lower than the previous one. This low is lower than the previous one. This high is higher than the previous one. This high is higher than the previous one, and then this high is higher than the previous one. That is how you identify that market is in an uptrend and this is in a downtrend. Alright, so a ranging market is when market is moving from support to resistance, resistance to support, support to resistance, resistance to support, support to resistance, resistance to support, support to resistance, resistance to support. So this is a ranging market or a consolidating market. In this uptrend, it means buyers are in charge of this market. In a downtrend, it means sellers are in charge of this market. Uptrend means buy, downtrend means sell. Ranging market is when the numbers of buyers and sellers are equivalent. In an uptrend, you can have 90% of buyers and then 10% of sellers, or you can have 80% of buyers and 20% of sellers, or you can have 70% of buyers and then 30% of sellers. In a downtrend, you can have 90% or 95%, as the case may be, of sellers, and then the rest can be that of a buyers. Alright, so majority carries the vote. If the numbers of sellers are much more than the numbers of buyers, the market will sell. If the numbers of buyers are higher than the numbers of sellers, the market is going to buy. But when the numbers of buyers and the numbers of sellers are the same, the market is going to range, market is going to consolidate. Alright, so that is it. So now a market is in an uptrend and it's creating a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and then it now create another higher highs. Now instead of market now to now pull down and create another higher lows, it now break below the previous one. If you break below the previous one, which is here, when market break below it, we say market structure shift has occurred. Now in trading this strategy, there are two key aspect or concept that we use. We have the concept of reversal and the concept of continuation. Now in this scenario, now let me explain the concept of reversal. The market is trending up, creating a series of higher highs and higher lows, and then all of a sudden, instead of market now to create another higher lows and pull up, it now break below the previous higher lows. And when it break below the previous higher lows, if it is a 1 hour 1 hour time frame, when the 1 hour candle that causes the market structure shift close, we mark this place and we say a market structure shift has occurred. Now a market structure shift is an indication that the current trend, which is an uptrend, is coming to an end and the market is about to trade in the opposite direction, or is about to trend in the opposite direction. If market is buying, having a long buy, long trend of buy, creating a series, remember a series, not just higher highs and higher lows. A series has to be a chain of higher highs and higher lows. So when market now break these higher lows here and close, we say market structure shift has occurred. Now in the scenario of a downtrend, market is in downtrend, creating a series of lower lows, lower high, lower lows, lower high, lower low, lower high, lower low, lower high, and then it creates this last low. Now instead of market now to pull up and create another lower high, and then it break above the last lower highs and the candle close, we mark this place that market structure shift has occurred. And what is market structure shift again? It indicates that this current trend, which is downtrend, is coming to an end and the market is about to change direction to trade up. Now it's about to buy. Alright, so that is what it means. Now alright, if you observe now, we said that when market is in an uptrend, create a series of the characteristics of an uptrend is when market create a series of higher highs and higher lows. So when market break this zone now, it's no longer characterized by an uptrend. It means it has changed. The futures of an uptrend is no longer there. It has changed to something else. So we now wait for that is the structure part of the strategy. The inducement part of the strategy is now for us to the liquidity part of the strategy is now for us to wait for a pullback, and the kind of liquidity that we make use of is what we call inducement liquidity. And what is inducement liquidity? Inducement liquidity is the first value pullback after a market structure shift or a double break of structure. So in this video I might not be able to explain that of a double break of structure, but I will explain that of a reversal concept. Alright, so if you want a video for the continuation concept, which is which will make use of a multiple break of structure, a double break of structure, you can let me know on the comment section. Alright, so now the inducement part of the strategy is when market will now pull back and then close slightly above the candle that causes the market structure shift. Now I offer mentorship program. If you have not joined us, try as much as you can to join us. This is the price that you have to pay. I do take my students on a regular basis. For those of you who have not joined us yet, you can join our Telegram channel, See the Way We Trade. If you are in love with the way we trade, then you can offer to pay for mentorship. You can copy trade and also make money for yourself. The signal is free. You can join our Telegram channel for free. The link will be on the description of this video and also on the comment section. All you need to do is just to click and join and make money with us. We just launched the Telegram channel newly because a lot of people have been asking. So we just launched it newly. You can join us and trade with us. You can also offer to pay for mentorship. The mentorship program is the price is very minute. That is the only way I can help. Alright, so you have the chance to ask your question, go on live classes, share all my trade with you. I take you through the journey and then we'll make money together. Alright, so after the inducement we now mark our point of interest part of the strategy. So the point of interest that we have is this breaker block here, and then this other block here. Now we have the rules in picking a proper point of interest. Rule number 1 say there must be a market structure shift, of which we have gotten our market structure shift. Rule number 2 say there must be an inducement. We got our inducement. Rule number 3 say that you should mark out all your possible point of interest. We just mark all our possible point of interest. Rule number 4 say the point of interest needs to be unmitigated. That means as market is creating this inducement, as market is pulling up, market is creating inducement, it should not touch any point of interest as you want to make use of. So as market create this inducement before you now close slightly, either slightly or below the candle that caused the market structure shift. So it touched this point of interest, so it has been mitigated. We can no longer use this as our point of interest. Then the final will say pick the point of interest that is closest to the inducement. So we delete this, we no longer make use of this. So the point of interest that is closest to our inducement is this one that's left. So depend on the candle that causes the market structure shift. The candle that causes the market structure shift break more level, maybe it close somewhere here, all this place will now be, all this breaker block now become our point of interest. But since it just break this zone and then this other block will now make use of them. This other block is what causes this market structure shift to occur, so it's also useful for our point of interest. So for this scenario, market will pull back here, trigger our point of interest and sell to clear out. When it's selling now, you now say to clear out this trend line liquidity. So that's how the strategy works. In this scenario, market will give us what we call inducement. After this pullback, the candle will now close slightly or far above it. After that, we'll now mark our point of interest. So this is our point of interest, and then this other block that trigger this market structure shift, those are our point of interest. Now the rules in picking a proper point of interest: number 1 say there must be a market structure shift. We are getting a market structure shift when market take out this zone. There must be an inducement, so mark this zone here as our valid inducement. So this is our valid inducement. Then rule number 3 say the point of interest needs to be unmitigated. Rule number 3 says you should mark out all the possible point of interest. So this is our possible point. This is our possible point of interest. So rule number 4 says the point of interest need to be unmitigated. So as market created an inducement, it does not mitigate those zones. So these 2 point of interest is still valid to be used. So rule number 4 says pick the point of interest that is closest to the inducement. So the one that is closest is this one here. So this is one that we'll use to execute our trade. So we expect market to pull back to this zone and then use this zone for a buy to clear out this trend line liquidity. So this is how the strategy work. So I don't want the video to be too long. For more inquiry, my contacts are on the description of this video, so you can contact me for mentorship. You can contact me if you want to join my trading community where you have like minds, you build connect across the globe. You can contact me as well. Let's make money together. So this will be the end of the video.